This is Dan Reeser. I'm joined by Hitesh. I promise this episode or this podcast is not sponsored by Nike, although it looks like it may be. Good to see you, Hitesh. Thanks for joining.
Thanks for having me here, Dan. Always a pleasure. Yeah.
Cool. Well, yeah, I know we've kind of known each other for quite a while now, and it's awesome to start working together more closely with you guys' recent launch on Kavura and upcoming launch on Acala. So yeah, looking forward to kind of learning more about you and Capex and everything today. So I guess could you just maybe get us started with just a little bit of background on yourself, kind of like your career, what led you here, and we can use that as a way to jump off.
Sure thing. So I've been in the space for like almost 5 to 6 years now. I got attracted to the space earlier in 2017. So my background is I've graduated with a degree of computer science, and I was running a marketing agency in like around 2017 when I graduated. And at that time, the Bitcoin prices were rising, and it kind of got me interested as to what is this new asset class? Why is everyone looking into it? And like, because I had a computer science degree as well, like I could actually understand the technology even better. And the more I read about it, the more it made sense to me that, okay, this is going to be a really, really good opportunity to get into, especially that it's literally starting right now. And so I literally shut down my marketing agency, gave my clients to a friend of mine, and then just got into the space. Like earlier, it was very random. Like I was talking to a lot of projects, trying to understand the space and everything. And after the 2017 cycle and 2018 came, and like the bear market started basically, and like a lot of noise also went away. That's when I realized that a lot of people are just doing POCs in the space, and there's not a lot of real world use cases. So that got me thinking that based on my capabilities, my skill sets, and the team I had with me, like we can actually do like a real world project and kind of see like how it goes. So I co-founded Comdex back in 2018. So the idea was for Comdex to be a commodities decentralized exchange. We were working with a lot of trading houses in Singapore, and the entire life cycle of commodity trading, we brought it on chain. And we also had like a partnership with Western Union. Like we were the only company back then to do on-chain settlement with Western Union with a very native stable coin that was inherent to the system. And we had validators approving all these banking transfers as well. And as a pilot, we did north of $50 million in transactions. So that went really well. And that gave me a lot of credibility in the space as well, and gave us a very, very good understanding of where the space is headed. And the more I understood the space, the more I researched, then I got on into the DeFi side of things. And I started exploring crypto with the Cosmos ecosystem. So back then, like I was one of the directors of Cosmos India, and we evangelized Cosmos in India, like build the entire dev community around it and everything. And like a year later from that, I was also one of the co-founders for Persistence. So it's one of the very strong projects in the Cosmos ecosystem, and primarily it's focused on liquid staking right now in DeFi primitives in the Cosmos space. So both the tokens got launched in the market, and like I had some experience by looking at the token life cycle of things. So like after having experience as an operator for a couple of years in the industry, I realized that product development and token as an asset class are two completely different things. And it is very difficult for any founder or any team to basically get both of them right in a very short time frame. Right? For example, if you look at equities or something, it takes a company 10 years to build the company and then have the listing. But here, the timelines are very short, right? You have to do everything that a equity Web2 company has to do, but also manage your token at the same time. So that's how I came about. So now I've started working on this project called Capex. So the idea around Capex is to build infrastructure for secondary markets. As we believe, like going forward, secondary markets in crypto as an asset class will play a very, very major role going forward in this entire ecosystem. Yeah. It's
Awesome.
Just been a journey.
Yeah, quite the background.
Yeah.
Could you maybe go back to, so when you started building Capex, like I guess what were the initial problems or pain points you were trying to solve, and how did you kind of identify those?
Right. So I felt like I got into the industry in 2017, and till 2021 when I basically started Capex, I felt like there's been a major shift in the way industry had been going in the past and how it is going to go forward from here. And like it primarily had to do with token as an asset class. Like all the projects from 2016, 2017, like they have very, very strong communities around them because there was not a lot of institutional capital available back then. So a lot of projects had to go and raise capital from the communities, and the communities became like one of the first investors to come into projects. The reason they have strong communities is because communities got the upside with the growth of the project, right? But now fast forward to 2021, like a lot of VCs, a lot of institutional capital came into the industry, and a lot of upside was taken away from the community. And what we see as a trend in this industry now is most of the tokens, like a lot of them will follow the same curve. Like there's 1 month hype, the token basically goes very high in the first couple of months, and then it slowly goes down from there, right? Once the unlocks start happening and everything, and community generally starts feeling that they are being used as exit liquidity, right? There's been a lot of bad actors in this ecosystem, right? Which kind of have taken like a lot of credibility away from tokens as an asset class also. But like, so I felt like there needs to be more maturity in this asset class. There needs to be more maturity in these markets because these are very early days, right? So that's how we came about building Capex. And so my experience with the previous tokens as well, a lot of, so I'm basically from the Indian ecosystem. So a lot of founders from the Indian ecosystem, like, so these guys have the best intentions. They work 24/7 on building the product, but at the same time, like their tokens are still following the same curve, right? They do pump a little in the starting, and then the communities are feeling very bad because people are losing money. So I'm like, there needs to be some instrument and some infrastructure which kind of takes care of this. So I started doing a lot of research around why it happens. And then like, so the products at Capex are engineered to make sure that we can support the token as a asset class and the entire secondary market infrastructure around.
Okay, perfect. So I guess that's a good lead into I guess more details on Capex. So I think one thing to start with, maybe for people who may not be familiar with like what vesting tokens even is. So talking through like teams, founders, early investors, and like what that looks like, and then maybe you can talk about like what wrapped vesting tokens are, and then start getting into like the Capx Exchange and things like that.
Got it. So basically, like if you look at equity markets as well, or startups in general, right? Like a lot of teams, a lot of people basically like working with startups because they get a lot of upside with the startup in terms of getting some equity. But how a lot of stakeholders basically structure it is like the founders, the team members, or the investors, or any other stakeholders, advisors, something that are associated with the startup. They're equity or their share is vested for a period of time. So the idea is like if any person is a founder as well, they should work for a certain period of time to basically deserve the equity that they will get in the company. And then there's like unlock cycles around it that, okay, you'll get your equity 1 year later, which is going to be 25% of the designated amount. And then you'll get like monthly unlocks and some things like that. So in token projects also, a very similar structure is passed on as well. So if you're a private investor, your tokens are vested for 3 to 5 years based on whatever the structuring for that project is. So it's been very common in all the businesses in the past, and it's very common in tokens also now. So what we are trying to do now is like what we have observed also, right? Like in equities, in traditional Web2 startups, right? The vesting primitives are same as what Web3 has derived, right? They'll be doing like very similar structuring, but the difference is very high because for a Web2 company, even though whatever the vesting around is, the listing time or the time to exit, for any investment or something is 10 years or so. In crypto, that exit time is just 1 year, right? So, but we are still following the similar vesting cycles, right? So we understood that one of the fundamental problems that tokens go very high in the start and then they start coming down is basically how the unlocks are structured and what the returns or gains are for the investors, right? In an equities market, any investor who invests into a project normally gets like a 10x in 5 years or 7 years or 8 years. In crypto projects, like normally this multiple goes very high, where an investor might be getting a 70x in 8 months or so, right? So if any investor is sitting on that high of an upside, it's in the investor's incentive to basically get an exit as soon as possible. So what we have done is we have created this instrument called wrap vesting token. So the idea is like if an investor invests in a project and he's supposed to get, let's say, 10,000 tokens 2 years down the line, this investor is issued 10,000 wrapped vesting tokens. So these are 1:1 peg tokens for the particular allocation that the investor is getting. And the idea is because this allocation is liquid now, and the investor can choose to basically sell it in the secondary markets, it kind of supports the price of the project. Like the idea is like if there's an investor who's sitting on a 50x versus there's an investor who's sitting on a 2x or a 3x, right? That person will bring less sell pressure to whenever the unlocks are happening. So if to give you an example, let's say you invest in a project which is you get a token at 10 cents and now the token is trading at $5. If there was a secondary market deal that happened and you sold your tokens to another investor for, let's say, a discounted price or something, the new person will be sitting on a much lower multiple on the unlock date, right? So the newer person has, or the newer investor has no incentive to sell at a 2x or a 3x. So on the unlock dates as well, you will not see the sell pressure that currently the projects are facing. So this wrap vesting token, it's nothing innovative, nothing new, like as to this is something that we have come up with. This is something that already happens in equity as an asset class. So in startups also, like there's multiple rounds, there's Series A, Series B, Series C. There's buybacks that happen, right? It's doing buybacks are very good, or giving exits to an angel investor by selling their allocation to, let's say, a Series C or Series D investor. It's healthy for the company because the floor price of the equity goes high. In tokens as well, the more liquid secondary markets come, the more the floor price increase, it becomes beneficial as well. So this instrument kind of enables all of this, because without a wrap vesting token, it will be the same problem. Every investor will be sitting at a 60x on the unlock date, and we'll continue to see the price that falls like with every unlock, right? So that's something that we are fixing with this instrument.
Yep, makes complete sense. So then how does a new project or a new company work with you guys? Because from my understanding, in order to have these wrapped vesting tokens, they have to do their initial token issuance via Capex, right? So what does that look like as far as like who are the best kind of fits with Capex as far as teams or projects? And then how do they get in touch with you, or how do they get started using Capex?
Sure thing. So basically, it's very simple. The entire process just takes 10 seconds for any project to start working with Capex. However, like they have to start working with us before they basically do their vesting transaction. So any project which has recently fundraised or is in the cycle of fundraising, like whenever they do their token generation event and whenever they do their vesting transaction where they are locking investor tokens for a certain period of time, the only thing that they have to do is they have to use Capex smart contracts to do this vesting. So this the smart contracts that we have it on all the major L1s and some L2s as well. These guys can just use that contract. The investor token go into a permissionless escrow, and 1:1 wrap tokens are issued to them. So it's very simple for a project. Like it's one click. They just have to upload the investor sheet and the details that this address is supposed to get these many tokens at this date or this point in time or something, and then just do one transaction of locking those tokens. So that's how like any project can start working with us. Like they don't necessarily have to talk to our team as well, because it's a complete permissionless infrastructure. Anyone can come and anyone can use it. However, like we're very happy to support in terms of guiding as to what are the benefits of doing so strategically. What are the best practices they should be doing when they are creating wrap vesting tokens and everything. So yeah, but it's a 10-second integration. There's nothing like that needs to be worked upon before this happens.
Okay. Cool. And then once these projects issue the wrap tokens, then they can start using your exchange that you've built and your Capx Liquid products. So can you talk about like what those products are for and kind of who they're geared towards?
Right. So we have two products primarily. One is called Capx Liquid and one is called Capx Exchange. So the product where you can actually lock tokens, create vesting cycles around it, and also issue these wrap vesting tokens is called Capx Liquid. And then Capex Exchange is a peer-to-peer order book-based infrastructure where like people can come and basically list their allocations as well in terms of like if they're looking for liquidity in the market. And so the idea is if you look at like equity markets, because there's a lot of maturity, there's like multiple series of funds. Like there's an angel investor, then there's like a bigger fund who does series A rounds, then there are funds, private equity folks, then there's hedge funds, right? So in private equity, the business is always giving exposure to the larger fund, right? But in crypto, what happens is a small angel investor and one of the largest funds in the world will be in the same round, and they only go to community for exit liquidity, right? But like if we go a couple years forward from now, we'll see that maturity where crypto projects are doing multiple rounds as well. What all of these different stakeholders can do is they can come to Capx Exchange if they are looking for liquidity, or if they're looking for some larger fund to basically buy their position. Like Capx Exchange works as a digital OTC, and we are not even custodians of this particular asset. Like we have seen what has happened with a lot of OTCs, right? Like these are all very trust-based systems. Like especially in a world where tokens are there and on-chain trust are there, we are still using all the primitive methods that all the other asset classes have had, right? So Capex Exchange basically acts like a on-chain OTC where people can just put sell bids, and then other bigger institutions can come and do buy bids as well. And one of the feedback that we have received is a lot of these trades are done with OTCs because there's a privacy layer to it, right? Because there's different ways different stakeholders in this industry process information. So we are also adding a ZK layer to our Capex Exchange as well, for like larger deals which larger institutions have to do. Like it would be very private to just the seller and the buyer, and these deals won't really create any FUD in the market. Because like after talking to a lot of people also, what I've realized is, let's say if investor A is selling like $1 million allocation after gains or something for 10 million to some other investor, like retail looks at it as like, oh, 10 million was dumped on the market. But if you actually look at it from an economic standpoint, it is the best thing that can happen for the project, because the floor price went 10x. And there's a new, stronger investor who's going to hold on to this allocation for a much longer period of time, right? So that's why we are also enabling a privacy layer to our exchange as well, where like larger deals can happen. And there's just a lot of privacy between the buyer and the seller, and there's no FUD that is created in the market for these transactions as well.
Makes sense. Yeah, and that sounds like that might be a common critique you were getting as far as like maybe like too transparent. So some people maybe want the privacy aspect. So that's smart that you guys built that. Is there anything else as far as just like general critiques that you're hearing from the market, and how would you kind of answer that question?
Right. So one of the first things that we basically get is like, why do vesting when you are doing liquid vesting, right? Like, what's the point of vesting tokens in the first place? So that is like one of the first questions that we always get, right? And like what after talking to a lot of founders, also what I've realized is like 90% of the founders in this industry have tech backgrounds. They are not founders who are very sound when it comes to economics or when it comes to managing a publicly traded asset, right? So these founders are so busy in terms of managing like all the current problems, right? Which is like, how do we capitalize? How do we scale our teams? How do we find the product market fit? They don't really worry about like the post-listing problems and things like that, right? But I feel like if teams, like for teams, and I tell this to all the founders, that we are not just building a product, we are building a publicly traded asset. So we have like a moral responsibility to all our community members also, right? And it is our responsibility to manage the asset better as well. So like I educate a lot of founders saying that like a lot of founders just launch their tokens and then it's on the market, right? Okay, whatever market decides, that's what the thing is, right? But like as a team, you should know exactly what will happen with the token, like how the market cycles are going to be, and how do you manage buy pressure and sell pressure, because you're aware, right, what your unlocks are looking at. So you know that how much buy pressure you need to bring to compensate for that, else your token will basically fall, or you basically facilitate a lot of secondary market deals before even the unlocks happen, right? So all of that needs to come in, and that's something that we basically get as feedback. A lot of founders don't really understand this as well, that we feel like it's so difficult to manage the token in the first place, let alone having a secondary market token as well, right? So to that also we tell them that you don't have to create a wrap vesting token for the team tokens. You don't have to create it for the advisory tokens. You don't have to create it for the founder tokens, right? Because you guys should be vested for the longer term, and it's stakeholder alignment. But your investors are in the business of getting an upside with you, and it's your responsibility to give them exits, and then also give opportunity to other investors also, right? It shouldn't be like one investor is making 10,000 with you. right? That 10,000x with you, right? That upside should be split between multiple investor sets where every investor is making 20x and then the new investor is making 20x. That's all the ethos of publicly traded assets, right? So that's one thing that we are working very closely with a lot of founders. Like personally, like this is not the first time I'm basically doing a token project. So my perception to token also has changed a lot after experiencing what we go through. So now that we are building this infrastructure, it is completely in line with what a token would need in terms of making the founder lives easier also. And it's something for which the founder has the ultimate veto. It's not like the investors can issue wrap vesting token. The ultimate decision is with the founder and the founding team. If they feel like Capex strategically benefits them and it can be a part of their overall strategy, like it's well and good, they can start using Capex. But if some founders don't believe that it's going to benefit them and everything, like it's their call, like they don't use Capex. So that's where we are. Yeah.
Awesome. Well, yeah, over the past year or so, Brian Chen and our engineering team have been building the EVM Plus to basically combine the Ethereum environment with Substrate,
Right.
which is kind of the native framework to Polkadot.
Right.
And it was last week, I guess today's July 8th, so about a week or two ago, it was awesome to announce Capex as the first team to really ever launch
Yes.
in the Acala ecosystem and launching on Karura. So could
Right.
you maybe talk, I know the Acala launch is coming soon, and you guys have launched in several other ecosystems, but could you maybe tell kind of, if you're talking to other developer teams or teams considering building in the Acala
Yeah.
ecosystem, kind of how you guys went through that decision-making process and what it was about Acala that made you guys want to build with us?
Sure thing. So basically, like our thesis is that we want to be where most of the tokens are launching, and Polkadot has been one ecosystem that we wanted to target for a very long time. And but like based on like the access to talent and resources, like most of our tech was completely ready on the EVM side of things. So when you told us that your EVM plus is also getting ready, we were like super excited about it because like on top of that, like we have been working with you, of course, for a very long time, and the entire Akala team as well. Like we feel like it's one of the best platforms to get an entry to the entire ecosystem. Like there's multiple benefits. First is like we didn't really have to change a lot of things on the development side of things. Like our EVM contracts were just ready to go. It was like such a simple integration. All like once you guys announced, it took us a day to basically like launch the entire thing, right? So that was really beneficial. Second thing that we see is like out of a lot of different ecosystems that are building within the Polkadot ecosystem, like Akala is leading the way in terms of how much liquidity you have on chain as well. And one of the primary factors that this is again another critique that we get, like how will you drive liquidity for secondary markets as well, right? So it makes a lot of sense for us strategically to be partnering with an ecosystem which is in the business of creating that liquidity, and like how it's been growing over the past couple of months as well. Like it was a no-brainer for us as well. And on top of that, we are also very excited that like AUST is going to become one of the base pairs for all the wrap vesting tokens. So and we are right now working on an infrastructure where AUST will be a base pair to wrapped assets on Solana as well, wrapped assets on Polygon as well, wrapped assets on Ethereum as well. So it will become one of the key stable coins for our entire ecosystem as well. So like whatever key components that we wanted and needed, like all were very readily available with Akala. So it was very easy and simple for us guys to then just plug everything into it. So yeah, very excited
Awesome.
as well. So,
awesome, appreciate that.
yeah.
Well, I guess last thing, if you have any closing comments, my last question was around just like where you guys are headed. So I know we've explained kind of like what's launched now, but if you talk through the next maybe year or two and your longer term vision and strategy, where do you see Capex going? And then if you want to just wrap up with how people can get involved or where they can follow you.
Right. So another thing that we observe that is happening is like 2017, 2018, a lot of ecosystems were really siloed, right? There was no way one ecosystem connects with other, like all the markets, all the users, everything was siloed, right? Today, there's like some level of interoperability that has kicked in. But at the same time, still projects are choosing to work with one ecosystem over another because there's benefits to be associated with an ecosystem, because a lot of benefits around that ecosystem come. Like I feel like a couple of years from now, when interoperability kicks in really, really well. And it's very, very flowy or flawless in terms of the user experience as well. Like a lot of ecosystems, it won't matter what you're building on, because whatever ecosystem you're getting associated with, you can still tap into the liquidity of other ecosystems as well. You can tap into the users and the markets of other ecosystems as well. So that's the world we are moving towards, right? Like if you look at like the real world today, that is where we are at. Like it doesn't matter where your servers are hosted as a Web2 company, right? It doesn't matter where you are siloed, or like where you are registered, where your team is sitting, right? Because it's global at the end of the day. But at the same time, it does matter when it comes to the economic side of things, that where is your equity, right? What are the regulations around that equity, or like in terms of the business aspects of it. So if we feel like tomorrow, in a couple of years from now, like a lot of ecosystems will become so interoperable that part of things will go away, but still there need to be very niche solutions for token as an asset class, because this asset class is literally just starting right now, right? Like I was looking at some numbers yesterday, like outside of the top 100 coins, there's just $150 billion in tokens now in this market, right? That's just a very small market. It's smaller than like a large hedge fund as well, right? So similarly, I feel like it's so early right now. So tomorrow, when people think about tokens or any services around the token, it could be entire token lifecycle management, right? From issuing the tokens, distributing it with your investors, communicating with your investors, or basically building some more structured products on top of this asset class, right? So we want to position ourselves there. That like when it comes to anything around the token, like we want to be the ones who have like infrastructure and products and support ready around token as an asset class. So that's our go-to. Like, so that's why we are building on a lot of different ecosystems and just trying to connect all the dots everywhere. So that's the main vision with Capex, that we feel like interoperability will 100% kick in, but we need to be specialized in like providing services and features and products for founding teams and other stakeholders in the ecosystem for everything token. So that's where, like, another analogy would be like, if a crypto Wall Street were starting right now, we want to be one of the first companies on that Wall Street, right? Where we bring maturity into the ecosystem. So that's how we are positioning, and that's the vision that we have.
Yeah, you're definitely well positioned. I don't think the number of new teams coming into the ecosystem is going to stop anytime soon. Right. So awesome. Thanks for
it as well. Yeah.
Yeah. Thanks for the time. Where should people follow for updates on your guys' progress?
Yeah. So the website is capx.fi. It's capx.fi. And our Twitter handle is @capxfi. It's again capxfi. And most of the updates we put on our website and our Telegram group. So Telegram group is again same @capxfi. Would love to meet new people from the Akala community as well, and then tell us like what we are doing. And thank you for having me over there.
Awesome. Thanks, Satish.